everyone, Mish, Chief Strategist of MarketGauge.com, here with you today, end of the trading day, September 18th, US. Of course, lots of stuff to be unpacking with the Fed, but we're going to do a very brief rundown on three instruments. We're going to look at oil, gold, and also the dollar. But I do want to sneak in a little natty gas, so we'll go for that too. Real quick, here we have, obviously, WTI. Everybody was looking at that $90 a barrel mark as the mark that could lead it up to 100. For me, it was really all about that 80, right? So we had that fake out over 80 a few times, and it didn't really follow through. And then, of course, we had the big dump down to the 200, so technically perfect here in spot, the clearance of the 50. Now here we are. So let's call that 90 here for what it is. It is a key area in that it was the last high before the dump back here in August 2022. But we don't know how much it's going to hold at this point. To me, as a natural contrarian trader, I can tell you that we actually took profits today. We still have a small position left in our oil. But we feel that when everybody and their mother is talking about the oil trade, it's probably time to lighten up a little bit. No particular reason from a fundamental standpoint, other than the fact that a correction could easily come. However, we can't deny the incredible strength in the face of the yields and the US dollar. So let's call 90 pivotal here. If it starts to break down under 90, I think you can see a trip down to 85. Remember, the corrections here have been shallow, but also let's not forget, still overall friendly. Clearly, we can't deny a bullish phase, that if we hold above 90, our next area where it gets interesting will really be up around 93.60. At that point, I would say we'd be overdue and probably overbought for a correction. So remember, 93.60, we could look at 90 as pivotal, 85 support. And even in the shorter term right now, if we just look at the closing price from last week, along with where we're trading right now, we can even say that under 90.78 probably would be a test of that 90 possible break. Above 90.78, bias is more bullish. Let's move on to gold. Actually, I take that back. Let's look at natural gas, then go to gold. So you know how much I've been looking at that 280 level. I really love this sideways consolidation. We just saw that shale oil inventories are down a little bit. That gave a pop to this market. But really, 280 is still going to be my key. Then 3, we get through there. Clearly, we have to look at these moving averages. But my sense is that if we start to break out over all of this sideways consolidation, we will see some buyers coming in, and we'll clear this 337 pretty easily, with the next real test coming right under the 200 at 363. So keep your eye on that, and also 250 as your rock line support. As I've shown you both the spot months in natural gas and oil, let's look at the December contracts in gold. I'm actually really starting to feel very, very bullish in the gold. Oh, I guess I've always been kind of bullish in the gold. But besides that, last week I featured to that you had to keep an eye also on the gold miners, that GDX chart. It actually did clear 2 days, Friday and Monday, the 50-day moving average, putting it into a better phase, or a recuperation phase. And this is lagging behind a little bit, but that's okay, because we want the miners to lead. So essentially what we're looking at right now is, I think, some nice double bottoming here, but we can't completely dismiss the idea of sort of a head and shoulders top. Here would be the head, and we're just working on the shoulder and we break down. What would negate that to me, obviously, would be, if we really wanted to be conservative, a move over that 50-day moving average at 1965. So that's my point, but I don't think we have to wait for that. So on a near-term basis, and again, impressive with a stronger dollar and higher yields, if we can get through 1955 coming into the trading day tomorrow, that would be a bullish sign to me, and I would then look to see what happens at 1965. Overall, if we're looking at the pattern from the high to the low in terms of this mini double bottom within the chart, then we're looking at from 1913 to 1980. So we're looking at about a $65 move if we take out this 1980. Of course, that would then put us up around that 2040 level, but we're jumping ahead. for now, looking at tomorrow, under 1950, probably another test of 1940, maybe even 1920, possible. Over 1955, definitely more of a bullish bias. See what happens at 1965. We get through there. I would feel pretty comfortable adding to the position, and then maybe starting to take some profits ahead of that 200 at 1975, and then keeping some and adding even more if we get through that 1980. Finally, the dollar. No denying the dollar is strong. Here we are, though. We still have the 50 underneath the 200 in spot. That's kind of interesting here. This is the continuous contract. But nonetheless, we are in an accumulation phase, if you will. And as such, we have certain levels to look at. I still kind of maintain, and I know it's not very popular, that this will not get back up over 106. Just a feeling. Nothing more. But if that turns out to be true, what we really have to say right now is that it would have to do some proving of that. And to me, the best proof of the pudding would be starting with a break under 105. And then I think we can look at all these open and closes here at around 104.70, finally under 104.50, and it'll look like I'm right, which of course would be very bullish for not only the oil, but definitely for the gold. On the flip side, we hold 105. You have to maintain a bullish bias. We get through 105.40, 105.50. Obviously, we'll be back and looking at this peak high that we had back in March, and that was during the mini banking crisis. That was sitting at around 105.92. So at this point, like I said, we could watch for some level of reversal, but at the same time, if we're just looking at the trend being your friend, it does still look positive for the dollar. It's just a question of how much higher it can go from here. Okay, that's it for now. Hope this was helpful. Thanks so much for watching, and see you all again real soon. Bye for now.